Hi, this is Binni here. If you had watched my earlier video on cup and handle, which I talk about 3 stocks having cup and handle, that's Tesla, Apple, and Amazon, then you know that Amazon moved up and moved out of this cup and handle pattern here. So that's your cup and this is your handle, because on its earning, it gapped up about 10-12%. So this is right now the price of Amazon trading around 249, and our bullish signal, which is the elbow, happened around this price here. That's about 223 level. Now this video I will talk about why it's good signal, and second thing, if you do want to trade into the earnings of any companies, then how you can limit the risk of your trade. That means how you can limit the maximum loss. Okay, now the first part is let's talk about what I see in Amazon. Apart from that, it had this cup and a potential handle. What I want to emphasize more is what happened during this handle here. Now, first was that the handle was tested twice. That means that at the low of the price here, that's about 210, this was also another support level that we've seen. So there was a test once and then it tested again at this same level here. So I do like to trade on the retest. Now, second, it's the elbow signal. Now, this elbow is specially crafted in TED, which is the indicator that I'm using and part of the Top Pro course. But what it does measure is the end of this consolidation. That means that once I see this elbow signal happening, it marks the end of this downward movement. So it doesn't get me in at the lowest price, but what it does is that it tells me that with the elbow, then the movement down, that means the temporary movement that we are seeing here, has already come to an end. Okay, so that's the second reason of entering into Amazon. The third one is that when the elbow signal happens, I was looking at MACD and saw that the histogram has a bullish divergence. That means that when price was heading lower, as you can see, this low and this low, it made a lower low versus the previous low, but the histogram, the MACD histogram, made a higher low as compared to the previous low. It says that as price moved down again, the downward momentum is decreasing. But again, that trading into earnings, it's high risk, meaning that it can flip the other way. In fact, that when the elbow happened, we saw that Amazon moved down to the support again, but then on the earnings date, it gapped up because of good results with the AWS. Now then the question is, how can any traders out there limit their loss? And that's the second part of this video. I'll be talking about the use of DLCs. I'm at Society General website. Daily leverage certificates, it's what SocGen is offering. Now, DLC is listed in Singapore Exchange. That means that it's an exchange product that you trade over the exchange. Now, the first thing to do is to go to Society General website, go to the underlying here and choose which is the stocks that you're interested in. In this case, I'm interested in Amazon, and then I would want to choose either the daily long or daily short. Now, these are the directions, meaning that daily long tells you that if price it's going up, that means that if Amazon is heading up, you will make money from buying a daily long. But if you think that in future price might be heading down, then you want to buy a daily short, because then you will gain profit if the underlying, which is Amazon, is heading down. So once you click on this, you realize that there are 4 contracts here. That means that 2 contracts of daily long and 2 contracts of daily short. Now, one thing to note, that one will be listed in Sing dollar, the other one is listed in USD. So that's the difference here. Now, which one to choose? I will always go for the star, meaning that I will look for the star, because with the star, it is the most sensitive. Now, if you take a look at the daily long here, and then let me just scroll here under this sensitivity region. Now, when it means that 0.159, this means that theoretically, if Amazon is to move by 0.159, that means is to gain by 0.159, that means at 15 cents, 15.9 cents, then theoretically this DLCs would move by 1 tick. That means that from 532 to 533. So what you can do is that you can click on this DLC here, and there would be details of this particular contract, such as, for example, how much is the performance over, for example, week or month, and then the airbag trigger, which means that the trigger that results in the DLCs being stopped for a while for trading, and then the listing date, expiry date, and the last trading date, and the trading currency. So all these are all here, as well as the overnight cost of holding this DLC. But what I do want to share is that, let's say for example, if you bought in this particular contract, let's take a look at what happened about 5 days ago. If you remember, Amazon announced earnings on 31st of October. That's caused a huge surge in the DLCs here. So on average, if you were to buy in on, let's say 30th of October, a day before the earnings, then Amazon was still trading at 230. And the DLCs was trading at 434 average. You can see the average price of this DLC, it's around 433. And when Amazon gapped up the next day, it was trading at 545. That means that if you bought in this daily long DLCs at 433, and pending on the announcement of this earning results, and it's trading at 545, that means a gain of about 27%, as you can see here. Now, the question would be, why is DLC a good instrument for trading into earnings? Because the maximum loss that you can have, I mean, I'm not talking about that you will make a loss. Again, that this is not a recommendation to trade into this instrument here. More important is to educate you on the feature of DLCs, is that, for example, if you were to buy into DLCs, let's say at 432, then your maximum loss would be 432, which is the amount that you paid for these DLCs. And do take note that the minimum units to trade would be 100 units. That means that if you buy these 100 units at 432, for example, or average of 430, it's easy calculation, then with 100 units, you do pay $430. And let's say if Amazon is to tank, that means instead of moving up, it's against your direction, then the maximum loss that you can have would be the price that you paid for this DLC, and that would be 430 times the number of contract. For example, you bought like 100 units, then that would be $430. Because this contract is denominated in Sing dollar, so that's 430 SGD. So instead of, for example, buying into Amazon, which at that point of time it costs 230 USD, then if you do want to trade into the earnings of Amazon, then you can use DLCs instead. Again, that you can explore many different instruments, and it's very important for you to understand fully how a DLC functions before you decided to use DLCs. Again, that this is just an illustration, a case study of how DLCs can come into play when you are trading to earnings. It doesn't mean that you must use DLC. That's almost what I would like to share in this video, because when it comes to earnings, a lot of traders fear, because it can just go up or down, and sometimes even with good earnings results, prices can tank. What we want to do is we want to limit our risk. Then my video here features on how and what can you do to limit your risk. Alright, hope that you like this video. If you do, remember to give a thumbs up and remember to subscribe to the channel, and I'll see you in my next video.